Hi everyone, I'm Karunya Rao, and in Ideas for Profit today, all eyes on liquor contract manufacturer Associated Alcohols and Breweries. The company reported a mixed set of earnings in the last quarter of FY21. Its revenues were a bit soft, but the net profits were way better than expected. Q4 revenues declined 5% YOY to 126 crores due to weakness on the volumes front. Benign raw material prices and control on discretionary spends aided the expansion in operating margins. While the net profit margin came in at 12%, net profit jumped 36% YOY to 15 crore rupees. AABL has logged in a decent financial performance amid difficult market conditions. Despite a washout performance in Q1, the capacity utilization for the full year stood at 80%. In 2018-19, the company expanded its capacity by 50% from 3 crore litres per annum to 4.5 crore litres per annum, which was largely funded through internal accruals. In the next phase of expansion, the company plans to enhance its capacity to 7.5 crore litres per annum along with cogeneration power plant. The capex outlay for the project is pegged at 110 crore rupees. From the incremental capacity, company will initially be focusing on ENA sales to grab ethanol market opportunity. In addition to Indian-made Indian liquor, AABL has recently forayed into the IMFL segment through the launch of proprietary brands. The IMFL brands are currently being sold in 6 states across India, the likes of Kerala, Delhi, Chhattisgarh, Madhya Pradesh and Uttar Pradesh, and the company also plans to further enhance their distribution reach to newer regions and states in the coming years. There's little doubt that AABL is a well-managed business with high levels of stability and consistency. The company manages working capital efficiently, which aids cash flow generation. In FY21, it generated operational cash flow of 67 crores, the highest in its history. The balance sheet is solid and the cash position at the end of March 21 quarter was close to 80 crores. The cash on the balance sheet will primarily be used to expand capacities and augment its distribution reach. The per capita consumption of liquor in India is far lower compared to Western countries and provides huge opportunity for growth. Favorable demographics supported by a large young population makes a strong case for long-term investment in alcoholic beverages segment. However, the near-term trends appear unclear as the consumer spending continues to be challenged by a fragile macro environment and disruptions being caused by the COVID pandemic. Q4 performance was muted, but the company does have solid history of earnings with steady payouts. It has grown its revenue at a CAGR of 17% over the past decade, with profits growing even faster at a CAGR of 45% during the same period. With the markets returning close to an all-time high again, investors have to examine through overlooked stocks to identify value buys. AABL, currently trading at FY22 PE ratio of 16x, is an underappreciated play within the alcohol sector and is trading at a much lower peer valuation as well. The stock is near 52-week highs but is still reasonably valued and offers good long-term potential to generate alpha for investors.